Hey, welcome everybody. This is Mark Dannenberg with Options Moneymaker New Cycle Trading and Analytics. We are here to present the fifth and final session of the Aurora Trading System training. So pretty excited about this entire program, the Aurora Trading System, what it's doing for our community of traders, and also the training that we put together to help guide you through an understanding of how simple this system really can be to trade. So in this session, we're going to be talking about PATS. I'm going to share with you what that means here in just a minute, and then we're going to have a review towards the end of the session. So we're going to conclude again, as we have in the first four sessions, with a Q&A. So if you have questions about any one of the sessions, any component of the sessions, or anything else related to the Aurora Trading System, just let us know. Okay, so PATS, I've been talking about this for the last couple of weeks, kind of leading up to this session 5. PATS is an acronym for Profit Accumulation Trailing Stop. Now, PATS is a method for managing your trading day and profit objectives. So we're continuing to provide to you some information and tools and ways of thinking that are going to help you. They're designed to help you be a more effective trader. Now, let me just touch on the concept of a trailing stop for a minute for those of you who may not be as familiar with it. In trading, when we are trading on our Infinity Futures Dome, we can use a concept called a trailing stop. And what that means is that when the price gets to, when we're in a position and the price gets to a certain level of profit, it kicks in what we call a trailing stop. And there is a trigger. That's the price at which we activate our trailing stop. And there is what we call a trail. And that is the distance behind the current profit level that the price trails. So what that means is if we set our trigger for 10 points of profit and we set our trail for 5 points, when the profit gets to 10 points, it will activate our trailing stop. And if it immediately moves back to 5 points of profit, it will take us out of the trade. But if instead, let's just exaggerate this a little bit for emphasis, let's say that the price moves to 30 points of profit and then retreats 5 points. That means that we would be exiting the trade at $25 of profit. So the idea of the trailing stop in trading is to have this trail, this distance behind the trigger that will never move backwards, but it will continue to follow at a distance of 5 points behind the highest profit that the trade achieves. So that's the concept of a trailing stop. What we are doing is we have created a concept that uses the logic of a trailing stop to help you manage your trading day. Now, one of the things that a lot of traders struggle with is, when should I stop trading? You know, if I stop now and the system delivers another 50 points, well, I missed out on 50 points. Well, if I don't stop now and I give back 50 points, well, I could have been better off. So it's almost like this: you can't win, you can't really be happy completely, can't be satisfied with your trading results. So what we're doing is we're introducing this concept. This is not a hard and fast rule. I'm going to talk about it a little bit more on the next couple of slides here. It's not a hard and fast rule. It is really a way of thinking about your trading. So as we introduce the profit accumulation trailing stop concept, you can apply that to your trading, along with the knowledge you have of what on a daily basis the average profit production is from the Aurora Trading System. We will share that with you each day in the live trading room. We can share it with you in general, and we can also share it with you as a breakdown by day, each day's profit production. We also have introduced to you the tool, the personal trading plan, where outside of market hours, you can plan for your own desired income, your own desired profit production. When you put all of these tools together, along with the concept, this kind of psychological aspect of trading called the profit accumulation trailing stop, it really starts to optimize your ability to earn income. So the PATS, profit accumulation trailing stop, is an effective strategy to manage towards your daily goal. So what is your desired income? Decide what that is. You have that planned in your personal trading plan. How many contracts are you going to have to trade in order to reach your desired income? How many profit points are you going to be required to achieve on a daily basis, on an average day? How does that relate to what the Aurora system is producing on an average day? So all of these are components that require some thought and planning on your part. If you want to move beyond just the simple, I'm going to trade a little bit today and we'll see how it goes, to actually developing yourself as a skilled trader, as a competent trader who is looking to expand and grow your personal trading business, then it's concepts like the profit accumulation trailing stop that you're going to want to embrace. PATS has the ability, although it will not all the time, has the ability to actually outperform the the Aurora trading system. And I'm going to show you a couple of examples here. It has the ability to outperform, meaning that at the end of our measurement day, which is 2 p.m., so from 7 a.m. to 2 p.m., we would look back at our PATS stopping point, the point in time which PATS would tell us you should stop trading, and we would compare that to the end of day 2 p.m. performance, and PATS may, on many occasions, have a higher level of profit production. PATS is also an excellent tool for helping those of you who are obsessed about trading balance your personal time and your commitment to your business, your commitment to your trading time. PATS may give you an idea of stopping trading earlier in the day. What better way of spending your day than maybe starting at 7 or 8 in the morning and being done at 10 o'clock in the morning, because PATS has suggested this might be a good place for you to stop. Then you can go do whatever you want for the rest of the day, go have a good time, knowing that you are comfortably on pace to meeting your personal income goal that you set on the personal trading plan. You didn't invest the entirety of 7 a.m. to 2 p.m. to accomplish that. There are going to be days where you are going to do that. And you can feel comfortable with a balance between trading time and non-trading time and still meeting your goals. I think that that's one of the strongest components, one of the strongest aspects of the profit accumulation trailing stop. So it's optimizing your trading time versus profit production. What we really all want is to hit our profit production goal, our desired income, but not have to spend the entirety of 7 hours doing it. I mean, that's actually what my goal is. I don't want to have to spend 7 hours, but I will commit up to 7 hours of my time in a day to achieve my profit production goal. I want to make this very clear. PATS is a decision prompt, not a hard rule. You're not going to get completely hammered if you don't pay attention to the PATS recommended trailing stop and the time that you may want to exit. PATS is suggesting that you stop trading. It's not a hard rule. It is a decision point. So much like we've talked about the daily risk limit, the daily loss limit, we have ours set at 85 points. So minus 85 points is our loss limit. It's not a hard stop. It is a point in time that you want to take a step back, look at how your day is unfolding, what time is it, where are you relative to your overall profit production and your forecast for the year, and make a decision about whether or not you want to keep going. So PATS is a decision prompt, not a hard rule. Okay, I want to make that very clear, because what we're doing with getting into more advanced thinking, advanced levels of trading, is moving to a point where you are learning to think like a trader, to actually think like a skilled trader. You're a business person owning a trading business, and you're a competent, skilled trader, and you want to make reasonably intelligent decisions. And we're giving you key points in time that will help you make a decision about whether or not now is the time to stop. I think one of the most challenging aspects of trading for a lot of traders, especially new traders, is they just keep taking more trades. They just keep taking more trades. And before they know it, they've kind of lost control of their trading business. We'd like you to be completely in control of your trading business, and we'd like you to be completely successful in achieving the desired income that you have. So here's the idea of PATS. Remember, it's profit accumulation trailing stop. Same concept as using a trailing stop when you're trading. So you start with an overall daily limit on loss. I've told you, we've shared with you, ours is 85 points. As profits are accumulated, the daily loss limit trails. Now, if profits are not accumulated, in fact, if I'm accumulating losses like we started out today, my 85-point loss limit isn't going to change. It's never going to move to 100 because I've lost some. I've lost some points as I started out. But I'm starting with an 85-point daily loss limit. And as I accumulate profits, my overall loss limit risk for the day will be reduced. So I'm going to give you an example of that here in just a minute. We're going to set a PATS trigger 20 points off of your daily profit goal. So these are very individual triggers that each trader's going to set for themselves. It's going to be based on your personal trading plan. In my personal trading plan, which I have shared with all of you, my personal trading plan goal is 120 points a day on my winning days. What I would use PATS for is to set a trigger at 100 points. If I've achieved 100 points of profit, which is 20 points off of my daily profit goal, then I'm going to adjust my PATS trailing stop from 85 points to 20 points. So let me say this just a little differently, and then I'm going to go right into an example here. If I get to a point where I've accumulated 45 points of profit, I'm not going to give back 45 points plus 85 points. So the concept of PATS is, I got to 45 points. I am now I'm willing to lose 85 points from where I am right now, which means that I could lose a total of 50 points for the day. So as soon as you start accumulating profits, then PATS kicks in and it protects you from giving back all of your profits and then some. But once we hit a certain zone, and for me, the definition of the zone is 20 points off of whatever your personal daily profit goal is on your personal trading plan, then I'm not going to be willing to give back more than 20 points from my trigger. And my trigger is 100 points because it is 20 points off of my personal trading plan goal. So here's an example. I'm going to walk you through this example. You might have questions. We'll review the questions at the end, but then I'm going to take you to our tracking tool, and I'm going to show you 4 specific prior trading days that give you an example of how PATS works. I've coded each day with our PATS exit. I was asked the other day when I was showing the personal trading plan why one of the numbers I put in the personal trading plan was different than what I had shown on the daily summary. And the simple answer was because I'm tracking in my personal trading plan PATS, because that's when I'm done trading based on the rules that I'm following with PATS. So I start out with a negative 85-point daily loss limit. That's where I'm starting. 50 points of profit accumulated. My loss limit now for the day adjusts to 35 points, because I'm not going to give back 50 points plus the original 85 points. So that means that my total loss limit for the day now, after I've achieved 50 points of profit, is only 35 points. Well, in my mind, that's a relatively manageable loss risk for the day. Now, again, that's not a hard stop for me. If I get to minus 35, I'm going to evaluate what's going on. I'm going to evaluate my last few trades. I'm going to evaluate what I see on the charts. I'm going to evaluate how choppy or how tight or how fluid the pattern is, and I may decide to continue trading. But it's not a hard stop. It's not a hard and fast rule. It is a prompt for me to say, okay, I got to 50. Now I'm down 35. Do I want to keep trading? I'm going to look at that relative to my personal trading plan. I'm going to see if I plug in minus 35 today as a losing day. I'm going to see whether or not it changes anything about my future forecast dramatically. So let's just say in this example, instead of it retreating back to minus 35 points, my daily profit goal, as you all know, is 120 points. PATS, my trigger, is going to kick in at 100 points. At 100 points of profit accumulated, I'm no longer going to accept giving back 85 points. So at 100 points, which is my trigger, which is 20 points off of my personal trading plan goal of 120, I'm going to adjust my trailing stop now from 85 points to 20 points. So what that means for me is, as soon as I hit 100 points of profit, I'm going to keep taking trades. But the worst I can do in that day is 80 points of profit. I might be willing to take, trades and lose another 20 points. It doesn't mean that I'm going to be at 80 points on the next trade if I lose, because a lot of our losing trades might be 3, 4, 5 points, might have a reversal. So all I'm setting up here is, once I've hit 100 points, I'm going to adjust the amount I'm willing to give back from 85 points to 20 points. So now my minimum profit for the day, I know, is going to be right around 80 points. As additional profits are accumulated, that minimum profit of the day will be 20 points off the highest profit of the day. So if I continue to accumulate profits, if I hit 100 points, and then the next trade happens to be a trending trade that runs 50 points, I'm at 150 points. And if the next trade I lose 20 points and I retreat back to 130 points, that's my PATS stopping point for the day. Again, not a hard rule. It's my evaluation period. And I would probably say, depending on what time of day it is, okay, now I'm done for the day. What PATS allows you to do, once you embrace it and understand it, is to confidently continue taking trades if you choose to continue to engage in the market for that day, knowing that some portion of the profits that you have accumulated may be donated back to the market. But once you've accumulated a significant amount of profits, I consider 100 points to be significant relative to my goal and also relative to the overall performance of the Aurora trading system, then I'm not going to be willing to give it all back. I've traded in the past where I've gotten to 100 and 120 points and I've donated it back to the market. It's just not necessary. So as we've been really narrowing our view of how to most effectively help traders think about trading and actually execute their trading with tools like the Aurora trading system, and how to track their trading towards certain income performance goals using the personal trading plan, the profit accumulation trailing stop, I think, is an excellent concept to embrace, to learn, and to use, and when you're evaluating where you are at any point in the day. Okay, so I'm going to go to the tracker, and I've got 4 dates that I want to show you, and we chose these 4 dates because they show kind of a range of performance with PATS and how it performs relative to the full day. So I'm going back to 11/9. Kristen and Aaron and I were chatting about it, and it shows a rather dramatic example of PATS. So on 11/9, we're accumulating some minor losses right out of the gate, and then we are accumulating profits, and then we get to a point where we are at or better than 100 points. My personal trading plan goal is 120 points. So now we've reached the level where I'm not going to give back more than 20 points. So when we reached 103 3/4 points of profit, on the next trade, if I had lost 20 points, I would finish the day at 83 3/4 points. And that's a really solid day for me. In this example, what ended up happening is we got to 234 points. We kept accumulating profits. We got to 234 points. And then we had a 20-point losing trade, and that put us back to 214 points. So I labeled that on that day as PATS. I highlighted it in yellow, and so I finished the day at 214 points. Now, what's my worst case? I ended up leaving 20 points on the table, but if I had stopped back here or here because I was close to my 120 points, I would have left another 100 points of profit on the table. So this was an interesting day because the rest of the day just kind of fell apart. If you had traded the entirety of the day, and we track the entirety of the day right up until 2 o'clock, you would have ended up down 95.5 points, and it actually stops tracking there because it would have exceeded our 85-point loss limit for the day. So there's just no common sense at all in being up 234 points and giving all that back plus 85 points. And without some sort of a thoughtful prompt like PATS that has a certain structure around it, then most traders are going to be kind of scrambling to figure out, well, what should I do here? Most of them would have stopped before they got to 234. And then how much would different traders have given back? Well, now I'm down 174. Now I'm starting to develop an attitude that the market owes me 50 points back. And, then it's kind of an ugly spiral. And then you start changing the rules. You say, okay, well, I'll take another trade, but I'm not going to risk 20 points. So I'm going to change my stop to 5 points. And then you just start deviating completely from the system. And it's a vicious spiral. So this is definitely a more extreme example, but it's a great example of saying at 10:06 in the morning, I'm done trading, having started at 7 o'clock. At 10:06 in the morning, I am done trading. And it's because I got up to a high of 234. I'm willing to keep taking trades, but from my highest profit accumulation level, I'm not going to give back more than 20 points. So let's go back to January of this year. So I'm going to go to January 7th. So January 7th, start at 7 a.m. You can see here we started with a few accumulation of losses. Then we start to gain some profits. Had a nice 50 pointer there. Start to gain some profits again, although we did retreat from 89 back to 57, but I don't have, at the point in time that I'm at 89 points, at that point in time, I won't do worse than 4 points of profit for the day because my stop is still at 85 points. Again, I'm going to repeat myself multiple times here. These values that you use as your trailing stop, as your trail, are going to be very individual to you. Until I get to 100 points, I'm still holding an 85-point trail. Now I achieved better than 100 points. And so at this point in time, when I have 117.25 points of profit, I will not do worse than 97.25 points of profit on that day. I'm willing to give back 20 points. What ended up happening is I continued to accumulate profits. When I got up to 187, I know I can't do worse on that day than 167.25 points. And it kept increasing at a little bit of slide back here, a little bit of slide back here, but we had gotten up to a high of 227. That means I'm willing to let it drift back to 207, got to 214, 224, and then boom, we ended up at 204, which was slightly less than the 20 points off of my highest level, but that's the way the trade worked out. So my stopping point on January 7th was my PATS stopping point, which was at 1248. So I don't have to trade until 2 o'clock. And I finished with 204.5 points. The rest of the day, actually just donated back a few points, not big, but PATS outperformed the system on the 9th of November, and it outperformed the system here on the 7th of January. And I also spent less time trading than I would by committing myself to the entirety of 7 to 2. Just have a couple others I'm going to show you as an example here. Here's the 10th of January. We got it started strongly right out of the gate at 7 o'clock. In fact, 7:51 trade, we were up over 100 points. And I knew at that point when we closed out that trade that I would not do worse than 90.25 points that day. And when I say not worse than 90.25, hey, if the loss on the next trade ends up putting me at 85 points or something around that, you know, the guideline here is to think about it. The guideline is to say it's around 90 points. It's not going to be exactly 90. So, you know, if it's a little bit more or a little bit less than that, that's a reasonably close target. So here I finished the day at 90.25 points. Now we ended up drifting back down to 59.25. So at that point, I'm feeling pretty good. And by the way, I'm done at 8 o'clock in the morning on that day. You all didn't know it that day because we were hosting the live trading room. The live trading room was just opening at 8 o'clock that day, but we'd already taken our 90 points, locked it, and shut down our live trading dome. And you can see here for the next couple of hours, we kind of drifted around a range of less than 90 points. And then we ended up finally finishing the day at 2 o'clock at 114.25 points. So I left 20 points, 24 points on the table, but I'm also done at 8 o'clock in the morning. And I'm right on target for what I want to accomplish with my personal trading plan. And I didn't have to spend the next 6 hours trading and really accomplishing not much more. It really wasn't until that last trade, which gave us kind of a mediocre profit on a trend trade, that put us back above 100 points. So at one point too, we had actually drifted down to negative, right? That would not have felt very good. So this is another example of, I believe the system actually outperformed, technically the system outperformed PATS, but there was an awful lot of anxiety after reaching that 90-point level where I would have given it all back and then I had to claw it all back again. And I didn't really start clawing it back until about the last hour of trading that day. So technically, if you look at the values, the system outperformed PATS that day. But if you look at the entirety of the situation where I'm done at 8 o'clock and PATS prevented me from going through all of this choppy stuff here, I think that PATS won that day. And the last example that I want to share with you here is January 12th. So I'm not just cherry picking the examples here. I've got PATS notated for most every single day, but I'm trying to highlight for you how PATS works in the concept. We start trading at 7 o'clock in the morning, actually off to a reasonably good start. We get up to over 100 points by 8:40. I know at that point in time that I won't do worse than 86 points. I debated right here because I was at 89.5 points. And remember, it's a decision prompt, not a hard and fast rule. Made the decision that I was willing to take another trade. I actually remember this specifically because the next trade had a fairly low risk level to it because of a fractal. So we took another trade, we made 10 points, and then we climbed back above 100, then we get to 119, and then we have a loss, 20-point loss. And so at that point, I'm done at 99.5. I'm done at 10:05 in the morning, 99.5 points. This is a day that PATS took me out of more opportunity. But again, I'm done at 10 o'clock in the morning, 10:05. And by the end of the day, the entirety of the system was up 205 and 3/4 points. So I left, 105 points, 106 points on the table that day, but I was also done at 10 o'clock in the morning. One of the things that I had a desire for when I first started trading was a level of freedom to choose when I worked, where I worked from, how long I worked. And PATS is starting to actually redefine that for me. It's helping me identify, well, this might be a good stopping point for you. Was there anything wrong with 99.5 points? Absolutely not. I was reasonably close to my daily profit goal. I plugged it in my personal trading plan. I evaluated what my forecast was for the next 12 months, and I realized that I don't need to trade anymore, and I'm done at 10 o'clock in the morning. I invested 3 hours of my time, and I had the rest of the day to go do whatever I wanted. Yes, by the end of the day, I would have ended up with 205 points, but there's a lot of decision making along the way. There's a lot of anxiety about, am I going to give back? Am I going to earn profits? You can see here that we've gotten up to 127 points, 137 points, actually, sorry, 147 points. So I would have been done if I hadn't stopped here. I certainly would have been done here at 127. If I didn't stop there, I might have been done at 117. There's all these decision points along the way. I was grateful as I watched the next trade and I saw it lose 30 points on that trade. I was grateful that I stopped when I did. I didn't know what was coming after that, but I was very content with 99.5 points on that day. So that's the concept is of PATS. That's the concept of using PATS. And I can randomly pull up most any day here and show you where PATS ended up. Some of these are pushed over a little bit. So I'm not going to go through any more, but if you have questions when we're in the live trading room about PATS here, it actually ended up being at the end of the day, there are some PATS exits that are no different than trading the entirety of the day. But I wanted to share with you those examples as a way to understand the concept of PATS and encourage you to incorporate it into your own personal trading. If you're in the live trading room and you want to share with me where you are for the day, what your personal trading plan goal is, and that you're considering pausing based on PATS, I'm happy to have that discussion with you. All right, so we're going to do a simple review before we get to Q&A. So what you see in front of you is a PDF document that is a summary of the rules and conditions for trading the Aurora system. And Kristen designed this, and I think she did an excellent job. Sometime tomorrow, this is going to be made available to you, and you'll be able to download it and print it if you choose to have as a point of reference. But the way it's laid out here is really very simple. It's reminding you that we're using 3 time frames, the 3-minute, 5-minute, and 10-minute, that we're relying on 2 primary indicators, PBAs and CXA signals, and that there are 3 primary entries that we follow. PB3s, PB35s, both of those are catch trades, and PB13, which is a trend trade. In the left box here is going to be all of the criteria, the entry and parameters and exit and management strategy and tips and other comments, all of that related to PB3s. In the right column here, the PB35s is the same information. The entry criteria, what qualifies a valid entry, what qualifies, what are the parameters, what are the right parameters for PB35s, and then what are your exit parameters, your exit rules here. And then some other tips when thinking about how to effectively manage PB35s. And then you have PB13s. And you have both entry type 1, entry type 2, and the relative rules related to each. What are the parameters, stops, and profit targets, and then management strategies and tips, and how to exit out of those trades, and other relevant conditions and things to think about. For example, if the previous 3-minute bar is 50 points or more, consider skipping the PB13. That's going to be true on all of the conditions. Sorry, each of the 3 entries. So we've put this together now that we've completed the 5 series training session. We've put this together. It's going to be made available to you. You can download it, you can write on it, you can make your own notes on it, you can do whatever you want to with it, but we're making it available to you as an easy, simple way to have a 2-page document in front of you that you can quickly and easily refer to whenever you are not sure about a trade, not sure about a rule set, not sure about what qualifies as an entry or what the right exit criteria is. So I'm pretty excited about not only the document, but the format. Kristen brought to the table her 28 years of learning development and learning resource and curriculum design to create this in a format that should be very easy for you to refer to and easy for you to use as a cheat sheet and a support tool for your trading. I want to throw in a general thought here, and then we'll get to questions. I've been having some discussions with our team and with Craig in particular. Craig is providing more and more information to me in terms of potential price levels, upper and lower price targets. So in the live trading room, you may, I'm not committing to this on every trade, but you may hear me say in the live trading room, especially regarding trending trades, you might want to consider converting your trending trade profit target to open-ended. And when I say open-ended, that means you either move your profit target out 20, 30, 40 points, or you just delete your profit target completely. You still maintain your stop. So just a hypothetical here, and we actually had a condition like this today, and Craig and I were chatting back and forth about it. We had a 50-point profit target on a trade, and Craig was starting to share with me that he felt that we would potentially move 40 points below that profit target. When we have good data, when we have good solid data that tells us that there is a reasonably strong probability that we could see price action that would move further than our standard default 50-point profit target, it would make good sense for us to open up that 50-point profit target and continue to use then in this case, it was a declining trend, continue to use the highs of the prior 5-minute bar. So if you turned off the 50-point profit target and you just let it run open-ended, we've had trades in our history that Kristen and I have experienced of 200 points, 170 points. And that's when we were looking at open-ended profits, but continuing to lock in profits along the way using the highs or lows of prior 5-minute bars. So I'm sharing that with you here because you may hear me start to discuss that periodically. It won't be on every trade, periodically in the live trading room. And I will share that with you when I feel that there is appropriate information that would warrant that being shared. So you don't need to ask me on every trending trade, hey, what's the price level target? Should we make this open-ended? I will share with you when I feel that the information that we have would warrant that as a possibility. When we have those conditions in the tracking, we will be open-ending also. We will be looking at open-ending and possibly taking a bigger profit chunk out of that trade, because it's not just willy-nilly. It's not just, I'm going to just see how this one runs. This is going to be based on data mining. It's going to be based on an analysis. And Craig is extremely thorough about his analysis, and he's got some fairly complex structure of algorithms that he's using to project that price level forecast. And it is historically solid enough that I feel comfortable suggesting, and it's entirely up to you, that you open end. Now, the thing about that is we aren't really going to be experiencing a significant difference initially, meaning if we're still using the high or low of the prior 5-minute bar, we're still going to use the high or low of the prior 5-minute bar. Where it might make a difference is if we were to hit 50 points and the high or low of the prior bar is, say, at 35 points of profit, and it comes back and takes us out at 35 points, but we had made a decision to open end, but it took us out at 35 before it moved lower or higher. Well, that's the risk that we take. So I don't want to get into locking in. I've discussed as a recommendation that you evaluate where you are relative to your own personal trading plan. Considering locking in on big impulse bars, that's not what we're doing. We're still going to follow the high or low of the prior bar. It's just that we may take a small amount of risk by not closing, not having a hard close at 50 points, and instead continuing to use the high or low of the prior bar. So you'll hear more about that in live trading room. I don't have any data on that for you right now. It's just simply going to be, you may hear me say one day, hey, we're in a trending trade. We've got good data that suggests that the profit target, let's say we're short the profit target, the lower profit target is 30 points beyond where our 50-point profit target is. We're going to open end this trade. It, I believe, opens up a small amount of risk, and the only risk is not losing. The risk is maybe not securing a certain portion of profit. But the opportunity to open end, it can be significant, especially as we continue to find ourselves in a more volatile market like what we've seen with bigger trending price movements. And we all want to take advantage of that to the largest degree we can. Okay, I'm going to shift to questions here. Rob is asking, if the system keeps giving you valid signals, is there something wrong with taking more trades? Will it be more of a losing rate? I'm not really sure what you're asking about, Rob. If you're talking about PATS, remember, it's a decision point, not a hard and fast rule. You can continue taking valid signal trades all you want and decide just randomly on your own when you want to stop trading. But PATS is designed to say, I've reached a certain level of profit performance, and that is tied to my personal trading plan, desired income. So here's where I'm going to make a decision to stop trading. Bob K is asking, what type of adjustments to the PATS system could be recommended if a trader is only trading the first 3 hours of the market and the profit goal may be less? You can set your trigger to whatever is comfortable for you, Bob. If you decide that your profit goal is 50 points, and maybe once you get to 40 points, you are willing to use a 15-point trail or a 20-point trail. I don't have, this is kind of getting ahead of maybe someone who wants to ask this question. I don't have a tremendous amount of data yet on this. This is a concept that we developed late into last year and early into this year, and we're going to continue to monitor. I will alert you when we review our personal trading plan, what our PATS stopping point was for that day. But yes, this is very individual. You have to consider your personal trading plan goal, and you have to consider what you are willing to give back if you get to within a certain zone around that personal trading plan goal. David's asking, what's a PB35D? What's a Q? PB35D is when we have a duplicate trade. As we've been trading duplicates, where we have a catch trade and we have a trending trade, Kristen just codes them as a duplicate. It allows us to do a little bit more detailed research. Q is not relevant right now. I've mentioned that in the live trading room. We're doing some research on yet another technical signal, which is not ready for prime time. Van is asking, PATS is built in and we can turn it on and off. Van, this is simply a concept. It's something that you are thinking about. It's not a tool yet that provides you any information. It's you evaluating where you are with your trading profit, and knowing that once I hit 100 points, that I'm not going to do worse than 80 points for that day. So there's no automated system for this. Aaron is working on a PATS component on the tracking spreadsheet, and that's a work in progress. We'll share that when we are ready, but it will be something where you could provide some values to me. I'll be able to plug them in the live trading room, and it'll give you an idea of what a reasonable target would be for you and what your performance would likely be. She's building it so that we'd be able to say, if we operated consistently with these certain stops and risk limits, what the overall performance would be using those. I think you're up to it, Arizona. I think you can do it. Oh, thank you for saying that, Brent. Brent's just saying this is awesome. Thank you so much for the team's great work. Glad I signed up for Aurora. We're glad you did also. Like I mentioned, Rob, we don't have detailed data yet. I'm going back and I'm looking at all of the days since I started recording PATS. We haven't summarized it yet to see how many days PATS beats the end of the day. There are enough days like that that gets my attention, And even if it doesn't beat end of day, when I'm able to trade and be done, say at 10 o'clock in the morning, or one example, 8 o'clock in the morning, that is huge for me in terms of balancing the time that I spend in trading versus doing whatever else I love to do. Well, that's something that you can do. That's something that you could decide to do, Greg. Greg is saying if you hit your goal and PATS kicks in, would you avoid taking a PB13 with a 30-point stop? That's one way that you could adjust your trading. Maybe if you were like me and you get to 100 points and you're only willing to give back 20, maybe you wouldn't take a trending trade. I haven't made that decision yet. So it means that I do have the risk of maybe giving back 30, and then I would be up 70 instead of 80. But it's a decision point in time, not a hard and fast rule. Kevin is asking, would you have any ideas for a newbie who starts with 5K? Should they lower the 85-point max loss day until they build their account balance? Of course, each trader is going to have to make their own decision, but I think that the minute you start altering certain parameters that we have built around the Aurora system, you run the risk of having significantly different results. The fact that we have only had 5 occurrences of a max loss in almost 14 weeks would say that I personally, if I was starting with 5K, I would go ahead and use the parameters that we have built. We know that the 85 points is chosen not at random, but it's because of our analysis on the frequency with which that level occurs. Like we got up to 61 points of drawdown today before finishing with a pretty small loss today, okay? So if you decided because you're not comfortable with that level of risk that you lowered to 50 points, you would have been done today. I think the minute you start altering to something that you don't have any tracking data on, you start to have some challenges. And Kevin, if you want to ask me tomorrow in the live trading room, I can show you different levels of average daily performance at different stop levels, different maximum daily risk levels. I can share that with you. And ultimately, you can make a decision on what you want to do. Bob L is saying, excellent cheat sheet. Absolutely. Kristen did a great job. Arizona's saying, oh, wow, that looks great. Thanks, Kristen. Van's going to laminate that PDF. That's awesome. Samson's asking, are you going to be trading Aurora in the trading room every day throughout the year 2022? Well, that's our intention. We have introduced the Aurora system to our trading community for the purpose of helping each of you achieve your income goals for the year. And we intend to be in the live trading room supporting that effort with Kristen identifying trade entries, explaining what we might be leading up to, and then she spends a fair amount of time abusing me in the room too. She picks on me a lot, so that's okay. I can handle it. Bob K is saying Kristen's the greatest. I was going to try to make a cheat sheet for my shell self. She's saving a lot of time and effort. Thanks, thanks, Bob, for saying that. Tony's saying, does the personal trading plan have a daily log tab? A daily log tab. I'm not exactly sure what you mean by that. In the personal trading plan, you have a section to enter your trades, right? That's your daily performance. That's over here in column S for your daily profit performance and the number of contracts you trade. But that's the extent of what we need to enter once we have the trading plan set up. I'll consider that. Tony's just saying I have a name for the open end trade strategy is PBSTL, sky's the limit. uh, that's kind of funny. I like that. We might do something like that. Let's see. Tony L is saying, love the changes in the live trading room, calling out the trades and what to look for. The PATS system makes a lot of sense. Calling out open-ended trades makes sense. Thank you for all that you're doing. Oh, you're very welcome, Tony. Deborah is saying, due to business obligations, I may not be able to trade during daytime hours. Can you comment on risk issues of trading during evening hours? To be fair, Deborah, we have not done any extensive amount of trading or data tracking in hours prior to 7 a.m. or after 2 p.m. Now, I've personally done some overnight trading. It's just, anecdotal at best. What I find is that, of course, the movements are much slower. They're not as significant usually overnight, but the trading signals, the Aurora trading signals, work just as well. So it's something that I think you need to gain a little experience with. You trade a sim trading dome to gain some experience with that, build some of your own data and history and understanding what to expect in times of day to trade. Okay, Rex is asking if we can take a look at the performance from 7 to 8. 7 a.m. to 8 a.m. For the 70 trading days that we have recorded in the database, averages about 15.5 points a day. 22 of those 70 days have been losing days. But the losses are pretty light. The average loss of those 22 days is about 16 points. Average loss is 16 points on losing days. And the average win on winning days is 30 points. So the average of all of that netted together is about 15.5 points. Brahma's saying, is Pat's approximate number based on our profit for the day where we start putting trailing stops on our new trades? I'm not saying you're going to put trailing stops on your new trades, Brahma. This has nothing to do with changing from a simple bracket order to a trailing stop order on your dome. That has nothing to do with that. This is simply a concept of thinking about where am I at each part of the day. When I've closed a trade, where am I for the day? Am I up 100 points and my goal for the day is 120? Well, I might not hit my goal or I might beat my goal, but it would be absolutely ridiculous to give back 100 points plus another 85 points. So PATS is really more about your personal philosophy of how to trade effectively and accumulate profits and have a reasonable and system-based point to stop trading. Richard's asking, there are questions out here I'm going to try to summarize in Richard's question, which are all about if this, then that. So if you hit your PATS trigger, then you get a signal for a double trade with 50 points at risk. Would you take only one of the trades? Well, if I'm at 100 points, I can guarantee I'm not going to risk 50 points. If I'm at 100 points, I don't want to risk 50 points. So I might only take catch trades after that, or I might only take a trend trade after that because trend trades have a higher percentage of wins in terms of profit production. So those are individual choices you have to make. What would make you happy? Are you willing to give up 50 points from where you are? If not, then you might not want to take both of those signals. Like I've said many times in the live trading room, it is not necessary to take every single signal that presents itself. You are in, I'm going to use my grocery store analogy. You are in the grocery store with thousands and thousands of items to choose from that you could purchase and take home. Do you need all of them? No. Do you want all of them? Maybe you want a lot of them. But what you have in front of you is a shopping list that's saying, these are the items I need to feed myself, to feed my family, to feed my friends, if I'm having a party or whatever. But there's way more available in the store than you need. The Aurora system is typically going to offer way more opportunity than what most of you are going to be seeking. We're showing you what it offers in the way of opportunity. 150 points, 150 points on an average day, 12 losing days out of 70, 190 points, 192 points actually on the average winning day. Well, how much of that 192 points do you really need, or how much would you desire? So now there's two ways to answer that. Build your personal trading plan. Mine is set at 120 points. I may not achieve that on an average this year, but that's where I'm starting because I know it's very realistic compared to the 190 points of average of winning day averages. And now I'm also going to use PATS. So when I hit 100, which is 20 points shy of my target, I'm not going to let it drift back more than 20 points. So if I ended up averaging over the course of the year 80 points, well, 80 points takes my forecast down. But is my forecast strong relative to $5,000 starting point? Absolutely. Absolutely. Okay. Oh, you're very welcome, Van. We appreciate having you here. Amy's saying, thank you for creating the tip sheet. I was going to make one from my notes. This is so awesome. Kudos to Kristen for doing that. Kevin D is saying, thank you. I'll ask you tomorrow to show those figures. Ask me, Kevin, but be patient. We'll take a look at those as we have time between trades. Yeah, so that's actually a reasonable suggestion. Kevin's saying he's referred several people to New Cycle Trading. Comments he hears is when they go live, the 85-point loss on the first day, if that were to happen on their very first day, would be 33% of their account balance. And what Kevin suggested to them is trading micros. Micros are a great place to start live dollar trading. The other thing, Kevin, here is anybody who is really following a very reasonable and conservative approach to starting out is going to trade in sim. And so if your friends that you referred are trading in sim for 30 days, they're going to gain a sense of comfort with what the flow of profits and losses is. But you can see here, I mean, it's no secret that if on the very first day you lose the full balance of your daily risk limit, it takes your account down 34%. Now, depending on where they are in terms of their their commitment to trading, what I say is have $5,000 in your account, and if you just happened to get so unlucky that the very first day of your trading happens to be a max stop out, replenish that $1,700, put it back in your account. We have not yet, and I'm not saying it will never happen, but we have not yet ever had two back-to-back max loss days. And our max loss days tend to average once about every 2 weeks. So if you are working with those historical odds, then what I would say is tell somebody to set aside $6,700 put $5,000 into their trading account and keep the $1,700 just in case in the first day or 2 or 3, they end up having one of those max losing days. They can replenish if they feel they need to, and they can continue to then build their account. But I love the idea of going from sim to micros. Even if you're trading 2 or 3 contracts in micros, it still is less of a loss risk and less of a total monetary commitment than with the minis. Yes, Kevin, or avoid the doubles. When Kristen and I started out, I was very clear with everybody in the room, we were not trading doubles. We were avoiding trading doubles, and it was particularly because of the percentage of the account that would be put at risk by doing so. Kevin M is saying, I am trading sim. I've taken every trade called out in the room the past 2 days. Before joining, I was petrified of NQ and its severe dome volatility. That thing does move, Kevin, that's for sure. I realize after the past 2 sessions, if I stay the course and accept how the system works, and I've been profitable, the system works. So thank you for sharing that, Kevin. That's awesome. All right, Arizona, we'll see you in the live trading room again tomorrow. Thanks for being here for this session. So I don't have any other questions or comments out there. I just want to say one last time that you can, let's see here, where did I put that? You can go to newcycletrading.com/Aurora, and there is information on that page that is very useful to you. There's a initial video, if you want to dig into Aurora a little bit more. There's more information on this page, but the real benefit is then at the top, if you click education, Dorothy and Aaron put together this list of tools that will help any trader, no matter what their level of experience is. All of you, because you are in this session 5, are paid subscribers, but if you have friends that are looking to possibly subscribe, that first one will give you a link to subscribe to Aurora or the personal trading plan. The next one is the same thing if somebody's specifically looking for the personal trading plan. The education sessions 1 through 4 are posted out here for anybody to take a look at. Session 5, you'll get a link tomorrow to access session 5 as paid subscribers. But for people who want to learn more about futures education, this is free. If you want to learn more about trading fractals, this is free. We've got some information out there about how to effectively use the Infinity Trading Dome, both using simple bracket orders as well as trailing stops. With Aurora, we've only been using simple bracket orders, but there's information on that. If you're ready to jump into trading options, we have a link to purchase the Profit Builder Plus program, which is a one-time cost of $596. $597. So it's one of the most comprehensive options education programs I think that I've ever seen, and I'm kind of partial, but I think it's pretty awesome. And then you can view the indicators on TradingView. You can learn more about the adaptive entry system, which was version 2 of our software prior to the Aurora, and then adaptive entry system, and then the profit flow analytics, which is version 1. So there's just a wealth of information out here, most of it free, some of it is paid subscriptions, but you'll know what the right time is and when the right time is for you to dive into the rest of that. Are you talking about the personal trading plan here, Rob? Yeah, that's based on trading 1 contract. You can see here that we traded 1 contract. Complete that. And Greg's asking if I can fill in today, trading system, hold on a second. Today we were right in lockstep with the system, down $250 on 36 trades, down $250 on 36 trades. So I'm going to go over here and put in down 250, 36 trades. There was no PATS today because we never got to 100 points of profit today. So continuing with a 120 point positive day performance and minus 30.25 negative day performance if we are willing to scale up to 10 contracts, which we have that built in the plan right now. It's 4.1 million. Yeah, you can see that right here, Rob. We've had a couple of losing days, but that brings the balance to 22,203. Did I do that, Samson? Well, I certainly did. Thank you, Samson. Thank you for being my editor. I typed in 26, not 36. So thank you, Samson. Appreciate that. We're working on that timing, Kevin. There's just a lot going on in the live trading room every day. Kristen's finally just figured out to just interrupt me, just talk over me when she's got something that she needs to talk about. All right, folks, I'm going to go ahead and close out this session. That concludes the training series, sessions 1 through 5 of the Aurora trading system. We will be open again in the live trading room at 8 a.m. tomorrow morning. Thank you all for being here. Thank you for your passionate embrace of the Aurora trading system. We've invested a lot of time in building the system, creating it, creating a set of rules, all with you in mind to help guide you to whatever performance level that you desire to achieve. AD is saying, we'll look into that as I see 2 losing trades per week minus last week. So let's see how it plays out. When you say 2 losing trades per week, we've had 12 negative days. And if I scan to see if any of those are not valid, there are a couple of them that are not valid. I'll tell you why, if you've missed it before. This one is not valid. If you're following PATS, absolutely no way you would have lost that day. So that takes us down to 11. And on this day, you would not have lost because with PATS, we would have never retreated and lost for the day. So that puts us at 10. So we have 10 losing days in 70 trading days. So AD 70 trading days divided by 5 is 14 weeks. So we've had 10 losing days in 14 weeks, 10 losing days in 14 weeks. And what I was saying before is 1 every 2 weeks is the maximum loss. We've had 5 max loss losing days in 14 weeks. So it's actually less than that. 5 divided by 14 is a third of a max losing day a week. So that's the way we are calculating that. But we actually have 10 losing days out of 14 weeks. So I'm not sure where you're getting 2 losing trades per week. That doesn't make any sense to me. Oh yeah, Samson. Thank you for being here. Appreciate it. Amy says she continued to trade today and was done at 12:30 with $1,500. But you took 62 trades. Well, you didn't follow along with us, Amy. You must have been taking some other trades that we are not taking. I know you're new at it, so I hope you're trading in sim. But just think about the fact that we took 36 trades, and what additional trades are you taking? Perhaps you have an erroneous understanding of some of the signals and you're taking signals that are not actually valid. Make sure that as you have the capacity that you're listening to Kristen calling out the signals so that you are following right along with us if that's what you choose to do. All right, folks, that concludes session 5 and the series. I'm going to go ahead and close out of the session, and we look forward to speaking to all of you tomorrow in the live trading room.